Welcome to the show today. Today we're going to be talking about how to become financially free by investing into real estate syndications. We have with us Mr. Michael Blank. He is an author of the best-selling book Financial Freedom with Real Estate Investing, and he also hosts a podcast called Apartment Building Investing. Let's give it up for Mr. Michael. How you doing there, sir?
Yo, Brandon. Great to be here.
I am glad to have you. You are a pretty much an expert in all things investing. It seems like.
Well, real estate. But have done a lot of businesses. I have a software background. I've actually owned 8 restaurants before. I traded stocks and options for a period of time. I flipped houses, did some multifamily, did a little bit of here and that. And it's all because I was searching for this financial freedom, right? Ever since I reading Rich Dad, Poor Dad, I got this idea of financial freedom, and I have been, I kind of consider myself the crash test dummy of financial freedom until I finally figured out the way, Brandy.
Oh, I love it. You know what? The thing about it is when you're trying to create your own environment of financial freedom, you find yourself in so many different pockets of doing different things. Like some people start day trading and they take the money from day trading and start flipping houses and until they found the niche that fits them, and then they just run with it. Where did you get started before you got into real estate?
Yeah, I actually I took an apartment seminar back in 2006. I hired a mentor to flip houses, so I flipped a couple houses, and didn't really. And then I got into restaurants, and so the reason I got back into real estate was because my restaurants were losing money, and I was trying to sell them, and I couldn't give them away. This was during the recession. No one wanted to buy a restaurant that was losing money. So it was very painful. So I remembered I flipped like 2 or 3 houses in 2006, 7, right up to the recession. And then I went back and I kind of clawed my way out with real estate. And when people say real estate, they immediately think about single family houses. They think about landlording or flipping or wholesaling, things like that. So that's what I did. I was just flipping houses. And then, I did accidentally get into a 12-unit apartment building from one of my wholesalers, and it was a freaking nightmare. After a while, I got it fixed up, and it kind of got boring because house flipping is really exciting, right? It's an adrenaline rush, and the apartment building started getting a little boring, but it was sending me like $1,000 a month an income. I was like, huh. At one point, I was like, man, I'm killing myself here. Like, yeah, I'm making good money on the house flips just to get money in that I'm losing in the restaurants. But this apartment building just keeps sending me mailbox money. I was like, man, I got to do more of that and less of that. And then since then, because I remember I was pursuing financial freedom. That's what I wanted. I didn't get it with the restaurants. Lost all my money in restaurants. House flipping, not bad, but it's not passive, right? It's not passive. Like, oh, I thought real estate is passive. What's wrong with me? The multifamily stuff was super passive, but I always thought that it was an advanced strategy that you would graduate to like 10 years down the road. The experience you get, the money you make, and you roll it into apartments. And that made a lot of sense to me, and it makes a lot of sense to other people. The truth is, though, it's not that's true. It's like a myth. And now we teach people, if they want, they don't have to, but if they want, they can bypass single family house investing entirely and go right into multifamily, because you can appear more experienced than you are in probably 30 days. You don't need millions of dollars of your own money. You can actually raise it from people. And so if you're empowered with those two pieces, you can bypass your single family house investing, get right into multifamily. And the people who do that, within 3 deals, they quit their job. It's just happens over and over again. And so therefore I got just very excited. That's why I wrote the book, The Real Estate, Financial Freedom with Real Estate Investing. That's why I have the podcast, because it is, in my estimation, the most powerful vehicle to quit your job in the fastest way possible for is a broadest audience possible.
That is so true. But you did dabble into a lot of other stuff. You was in real estate. You did some real estate before that. You owned some restaurants. So tell us, how did you go from the software IPO until this particular thing? So you did do some software at some point in your career. Is that correct?
Yeah, that was my job. I'm highly educated, Brandy. I have a master's in computer science, which of course I don't really use anymore. So that was my background. And then the company I joined in the late 90s, I was part of the internet gold rush, which was super cool, and put a bunch of money in my pocket through an IPO. So when I read Rich Dad Poor Dad in 2004, I was flush with money. I was like, this is great. I'm the man. Right. And so once I read that book, I was in a giant hurry to deploy this money into passive income. I mean, in much too great of a hurry, you know. And one of the mistakes I made is I didn't have a mentor to help me deal with that, you know. And especially getting into restaurants, I mean, they would have asked me some questions that I would have told my younger self to ask before I got into it. So I just really rushed to get this financial freedom, and therefore I tried a lot of different things because sometimes some things, like you said, you prefer, and some things you don't prefer. You got to try different things. But then I was successful with one thing, which is a house flipping, but it wasn't passive at all. And it's like you're it's like you're climbing the ladder of success, right? You're like, wow. And then after like several years, you get to the top, you're like, yes. And you look around and you realize the ladder's up against the wrong wall. You're like, oh my, I don't even want to be on this wall. You're like, I just wasted 4 years of my life doing stupid stuff, being successful in something I didn't think it through. It didn't lead to passive income. And so it was a really an utter lack of clarity with really anything. And that wasn't the most efficient way to go. So today we kind of guide people. I mean, real estate is not for everyone, but it is for a lot of people. A lot of people.
That is true. Real estate is one of those businesses. That's how I got started in literally in investing. I started out working for a real estate developer, and then I was in the sales department. This is when sales was plentiful. This is when you can close and do a mortgage all in the same day.
Oh yeah,
Everything was great.
the
Yeah,
good
this is
old
way back,
times.
the good old days. And then I got into investment banking, private equity later in my life after the market 07, 08, 09 situation. So you had a chance to literally dabble into these different spaces. Why is passive investing in real estate syndication an alternative to like the investing into like the stock market, like stocks?
You broke up at the very end. Sorry.
Okay,
Ask that last question again. I lost like
why?
4.5 seconds.
Oh no, why passive investing in real estate syndication is the best alternative to the stock market?
Yeah, that's a great question, and there's several different reasons for that. Several disadvantages of the stock market. One of the advantages of the stock market is liquidity. I can buy something and sell something tomorrow. The downside of the stock market is this high degree of volatility, uncertainty, and this frustrates people who want to invest because they want to make long-term plans for to fund their kids' college, for retirement, right? You want to make a 10, 20, 30-year plan. Well, you can't because of this daggone thing like the recession, or in December of 2019, the market lost 35%, and people were like, oh my gosh, I needed that money in April, and now 30% of my income, is down. And volatility and uncertainty frustrates people. Number two, people with money, they want the same thing everybody else does. They want to control their time. They actually want financial freedom in the same way that the real estate investor wants, but they can't get it because there's no cash flow from stocks unless you're doing advanced option strategies. That's super advanced. So there's no cash flow. All right. Which means that my only remedy is to save, so I can invest more and more in the stock market. And then there's a 4% rule. If I want to have $100,000, I need 2.5 million deployed so I can pay myself $100,000. That's a lot of money for a lot of people, right? I mean, most Americans don't even save. And then number three, the other problem with the stock market is you pay taxes on the gains. Every time you sell something, you're paying taxes. And so those are all disadvantages. Now, in multifamily, for example, the way the multifamily performed in the last two recessions, including this one with COVID, was unbelievable. I mean, the worst that happened for most multifamily affordable housing, not class A luxury, but affordable multifamily, the worst that happened is that rents were flat for like 2 years. Oh no, rents are flat. It's not like people moved out and buildings were vacant. They need a place to live. So I love the way that it performed in recessions and down markets. Number two, of course, is the cash flow. And that's the financial freedom aspect. If our goal is a 10% cash on cash return for an investment, and you invest $1 million, let's say, that's $100,000 in cash flow. That's, and there's some, let's say 5% upside in that. So now I don't have to save 2.5 million. I have to save $1 million, which is less than half. So I get cash flow. And number two, the IRS gives and the government gives us tax incentives to invest in real estate because, my gosh, we need more affordable housing. So the tax code is such where the income you're making every single year, they have something called depreciation. It's this phantom expense. It's like magical. I don't even know what it does. It's like this. So your people are getting $10,000 for the $100,000 investment. They go buy a boat, beer, whatever. And then on their K-1, which is their tax document, they're showing like a $30,000 loss. And then their CPA is like, "Oh, I'm so sorry, Brandy, that you're such a bad investor." And you're like, no, you don't understand. I made money. It's just, it looks like a taxable loss. And so the tax incentives are magical. So for those reasons, multifamily investing, as long as with a few other asset classes I like, not for me, but like self storage, for example, mobile home parks, they have similar performance. On the other hand, office, not so good. Like office in COVID, very bad, 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 bad. Retail, in 2008, not good. COVID, it was okay, but my gosh, if a restaurant closes, that's not good for the retailer either. But these asset classes have a lot of commonalities in them. The biggest thing is people need to get their mindset around that. Oh my gosh, I can actually invest in something outside the stock market, and just take a little bit of time like this, watching, listening to this, maybe reading a book and educating about these alternatives, because they're much better, especially in the long run.
So, what do you think is a great investment at this particular point in our environment when it comes to the stock market? Do you think that people should take the dive and go on the wave of these AMC stocks or these BlackBerry stocks, Nokia, or should they take a more of a um, hard asset of investing into real estate?
Yeah, that's a great question. I think people watching this, they shouldn't just take their money, sell everything, and plunk it into some alternative investment. That's not what I'm saying. I'm saying start investing a little bit of money in alternative investments. Educate themselves around that. Cryptocurrency like Bitcoin is like whatever. I don't know enough about Bitcoin. I don't know enough about AMCs. I don't have anything invested in the stock market whatsoever. So I'm probably the wrong person to ask. However, if you're asking questions like that, it implies that someone is educating themselves about these companies, about Bitcoin, about all these things, which is already a major step forward, because most people, as you know, they just trust their financial advisor. They're going to take care of them. They have no idea what they're invested in. They get a stock tick. This was my financial. Hey man, there's a hot IPO. Okay, let's do it. How much you want in? 25. All right, I'm in. I know nothing about the stock. So the question, the reason that you're asking this question implies that someone's actually researching the stock. And I have no problem with someone investing in Nokia or wherever else if they research the stock. And that's how Warren Buffett makes his money. So there's nothing inherently wrong with stock. What's wrong is people don't know what the heck they're investing in.
So, how do you think people should? So, those investors that want to get into passive investments, what do you think should be their first step into that real estate market? Like, the many different people that I've interviewed into real estate, I always say wholesale is the kind of like the best way to go first. What do you say?
Well, let's look. I mean, wholesaling. I mean, as a passive investor, you can't really invest in wholesales for one. But turnkeys, for example, is super popular, right? So the model is you have some money, you have $50,000 to invest. You sign up with a turnkey provider in, let's say, Memphis. You get the bank loan, you buy the house, you own the house, but the turnkey provider finds the house, fixes it up, puts a tenant in it. Actually, sounds pretty cool. It's a passive investment and it's real estate. Awesome, checks a lot of boxes until the tenant doesn't pay, or yeah, it doesn't pay. And now it's vacant for 1 month, 2 months, 3 months, 4 months. Hey, what's going on over there? Well, turns out, they didn't fix a gas leak, and the guy moved out and they haven't fixed it yet. Now, why didn't they fix it? I don't know. Who knows? All of a sudden, you're asking questions. And now all of a sudden you go from passive to active investor. You're flying out there. What's going on? Then you got to put another property manager in there and you're like, one is fine, but a lot of passive investors have more than one, as you know. And all of a sudden, and almost exclusive when I talk to turnkeys, they're like, "This is a nightmare. I'm never doing that again." And it's for this particular reason, right? So, yeah, so that's the problem I have with some of these turnkeys. Passive investing is a little bit different because you are investing with an operator. So you're investing in the company, in the operator that is operating you have shares in that entity. Now the trick with that is investing with someone that you trust, that has a strong track record, that you can trust to make the right decisions about buying, about management, about refinancing, about selling. And there is some work up front. That is true. Maybe even more than researching a stock. But the good news is it's you don't have to do it every single time. Most passive investors invest with one operator, maybe two, but it's not like 10, right? So the way you get into this, if you go to these real estate investing events in person or virtual, or you pick up, one of these books and you educate yourself about what is this class even. And then you start meeting some people and some operators. You start asking some questions. And you might find someone at a conference, virtually or in person, where you go, "Hey, I really like this person." You listen to their podcast, you watch their YouTube video, read their book, and like, "Man, I really, I feel like I trust this person. Let me call them. Let me have a conversation with them, and let me ask them questions." By this point, you know what kind of questions to ask, and you can ask intelligent questions. And then you say, "Look, I'm going to give a shot. I'm going to give it a shot. I'm going to take $50,000 out, and I'm going to invest in the syndication." And then you watch and see how they behave. How are they communicating? Right? How are they communicating? How are they behaving? And then you might want to invest with them again, or maybe you find another operator to invest in. and you start investing more and more, and then you get the bug. You're like, my gosh, that's the best thing since sliced bread. And you continue moving more of your assets into there. And then you might get into other things like, like oil, totally different, or precious metals, things of that nature, because now your head is out of your rear end, which is a stock market, because at least now you have more awareness. And then leave some in the stock market. And there's people who are intelligent investors, like you talked about, who research these companies, like Warren Buffett does, and goes, these guys are undervalued. I'm investing, and I'm going to hold these things for 5 years. I have a lot of respect for that, but most people don't bother with anything like that.
Yeah, I mean, there's a lot of different alternative investing going on. Like you said, cryptocurrency is another new wave of alternative investing. Hasn't been out that long, but I mean, Bitcoin has shown you that, if you would have took that first ride with them, you would have been having a lot of money at this point right
Yeah,
now
but
in your
here's the
life.
thing: how the heck do you analyze Bitcoin?
Right.
Like Warren
Nobody
Buffett,
knows.
nobody knows.
Nobody
Warren
knows.
Buffett would never buy it because he can't do a fundamental analysis on it, right? So it's 100% pure speculation, which is a step below maybe gambling. I don't know. I mean, yes, should I have bought it 5 years ago? Would I have been a gazillionaire? Yes, but I would have been lucky. Really, I don't. You know what? I don't want to be lucky. You know, I want to make investments that I can plan for, and I think that's what people want. Yes, have some gambling money, buy a Bitcoin. Buy whatever. Go to the casino. That's fine, but don't plan your entire financial future on Bitcoin, because that could go bad. That's all I'm saying. I want base hits, reliable base hits I can count on.
Oh yeah, absolutely. No one should ever just put all the eggs in one basket. It doesn't make any sense, right? No, I think the approach that you have alluded to is very diverse. Little oil, little precious metal, a little bit of stock, a little bit of real estate. That way, your portfolio is diverse. It's a little bit leveraged. That way, you have some security if the market does go sideways at some point. Um, so tell us, how can we look you up, and tell us where we can find this wonderful, wonderful book of yours?
It's a wonderful book. It's on Amazon, called Financial Freedom with Real Estate. You can find me on my podcast. It's the Apartment Building Investing Podcast. We're about to rename it to the title of this book because our message is much broader than that. So if you want to quit your job, your partnership, and you want to do it with real estate, I'm hopefully the guy with you. And we have resources for active investors who want to get active, but also we have resources for people who want to invest passively as well. And the website is themichaelblank.com, because there's only one. That's why it's the, and it's BLANK. I just pronounce it funny.
I love it. Thank you, Michael, for joining us. I appreciate it very much.
It's great to be here. Thanks for having me.
All right. Thank you. Next IBS.